All right, so have you ever wondered if there's like a stock out there you could buy today and just hold on to forever?
A forever stock.
Yeah. Like, is that even possible?
That's a really interesting idea. And actually, there's a recent Motley Fool article by Anders Byland that explores this very concept,
Oh, cool.
using Berkshire Hathaway as a prime example.
Okay, so we're talking about this article from November 28th, 2024, hot off the press.
Yeah.
But honestly, the idea of a forever stock sounds a little far-fetched.
Yeah.
I mean, the market's always changing.
Yeah.
Companies, rise and fall all the time.
Mm-hmm.
So what makes Byland think that any single stock could survive all of that?
Well, Byland sets out some pretty specific criteria.
Okay.
He says a true forever stock needs 3 key things: longevity, diversification, and excellent leadership.
So it can't just be like a one-hit wonder, right? It
Yeah.
has to be built to last.
Exactly.
And not just survive, but actually thrive for decades.
You got it.
Right.
And that's where the diversification part comes in.
Oh, okay.
Byland argues that a forever stock needs to be spread across enough industries
Yeah, that makes sense.
that it can withstand those economic downturns
Yeah.
and adapt to those changing market conditions.
Well, couldn't you just get that with like a broad index fund? I mean, those are designed to be super diverse.
True. Index funds are great for spreading risk, but remember,
Oh,
we're looking for a single stock,
a single company.
one company
Gotcha.
that embodies this forever potential.
Right, of course. So I guess even those like mega cap tech companies like an Amazon or an Alphabet with their fingers and everything wouldn't quite fit the bill.
They're definitely powerful and diverse, but even those giants
Yeah.
aren't spread across enough different sectors to offer that truly comprehensive diversification
Okay.
that a forever stock would need.
Uh-huh.
Their fates are still tied to the tech sector's overall performance,
Well,
after all.
Okay, so no index funds, no tech giants. So that brings us to Byland's pick, Berkshire Hathaway. I know they're a big deal, but what is it about them that makes them stand out as this potential forever holding?
Well, Berkshire Hathaway is unique because it's not your typical company.
Oh.
It's what's called a holding company, which basically means that it owns a massive collection of other businesses.
Oh, wow.
So imagine like a basket of stocks,
Yeah.
but instead of just owning pieces,
Okay.
they own the whole company in many cases.
So it's like they've created their own little mini stock market within one company.
Exactly. And that's where the diversification comes in.
Okay.
Byland counted nearly 70 companies directly owned by Berkshire Hathaway,
Wow.
spanning a huge range of industries. This isn't just a company, it's practically an economic ecosystem.
All right. I'm definitely intrigued. So, give us the rundown.
Yeah.
What kind of companies are we talking about here? Paint us a picture of this, Berkshire universe.
Okay, so think about it this way. You start your day, you might grab a Duracell battery made by a Berkshire company.
Okay.
Then you head to work. Maybe you're insured by Geico.
Oh, right.
Another Berkshire holding. On your lunch break, you grab a burger with Heinz ketchup, also part of the Berkshire family.
Wow. So they really are everywhere.
Right.
But that's just consumer goods.
Yeah.
What about those core industries Byland was talking about?
Yeah.
Does Berkshire have a stake in those too?
Absolutely. They own BNSF,
Okay.
one of the largest freight railroad networks in North America.
Wow.
They're literally moving the economy,
Yeah.
transporting goods across the country.
Uh-huh.
And their energy subsidiary, Berkshire Hathaway Energy, is a major player in renewable energy
Okay.
with a huge focus on wind and solar power.
So we've got transportation, energy, consumer goods. This is starting to sound like the most diversified company on the planet.
And we haven't even touched on their stock portfolio yet.
Wait, there's more?
Yeah.
On top of all those companies they own outright, they're playing the stock market too.
Yep. And they're not messing around. Think about it this way.
Okay.
Berkshire Hathaway owns a chunk of Apple so big it's worth over $70 billion.
That's insane. All right, so we've got this incredibly diverse mix of directly owned companies and then this massive stock portfolio.
Yeah.
I mean, the diversification box is definitely checked.
Right.
But doesn't all of this kind of come down to Warren Buffett's genius?
Right.
I mean, what happens to this whole empire when he's gone?
That's the million-dollar question, right?
Yeah.
And with Charlie Munger recently passing away at the age of 99, the question of succession is more relevant now than ever.
Yeah.
But Byland argues that Berkshire is built to last,
Okay.
even without its legendary founders.
So it's not just about Buffett. It's about, a system, a philosophy that's been, ingrained in the company's culture.
Precisely. Think of those demanding criteria Byland laid out.
Okay.
Longevity,
Right.
diversification,
Yeah.
and excellent leadership. We've seen the first two in action, but that third one, leadership, that's where things get really interesting.
Okay. I'm hooked. So tell me more about this deep bench of talent that's supposed to carry the torch after Buffett.
Well, you've got people like Todd Combs and Ted Weschler, who've been making major investment decisions for Berkshire for years. Remember that massive bet on Apple back in 2016?
Oh, yeah.
That was them.
Really?
Yeah.
Wow. So they've got the experience and they've got Buffett's trust. I mean, that's pretty reassuring.
Right.
But I have to admit, I'm still a little skeptical about this whole forever idea.
Mm-hmm.
Are there any, cracks in this seemingly perfect facade?
Sure.
What are the potential risks that maybe we haven't considered yet?
That's a great question, and one that we'll definitely explore in the next part of our deep dive.
Okay.
Because as impressive as Berkshire Hathaway's track record is, no company is immune to change.
Right.
We need to consider the challenges they might face in the decades to come.
All right, you've definitely piqued my curiosity. Listeners, we're going to take a quick pause here, but don't go anywhere. We'll be back in a flash to delve into those potential risks and really see if Berkshire Hathaway deserves that forever stock crown.
Sounds good. So before the break, we were really admiring Berkshire Hathaway's impressive structure and leadership, but we know nothing lasts forever, right?
Right. As much as I'd love to believe in this whole, forever stock fairy tale, I can't help but wonder what could go wrong. What are the potential pitfalls here? What could make even, a powerhouse like Berkshire stumble?
Well, one challenge is just the sheer size and complexity of it. We've talked about its incredible diversification, but overseeing such a vast network across so many different industries, that takes some serious expertise.
Yeah, it's like juggling chainsaws while riding a unicycle, right?
Yeah, exactly.
One slip up and things could get really messy.
Exactly. And remember, no company operates in a vacuum.
Sure.
The world's in constant flux, and external factors could throw a wrench in the works even for Berkshire.
Okay, so, what are you thinking?
Well, think about their massive investment in renewable energy through Berkshire Hathaway Energy.
Right.
What happens if government policies shift away from renewables?
Yeah.
Or some new disruptive energy technology comes out of nowhere?
That's a good point. Even with all of that diversification, certain global shifts could really hit them hard.
Exactly.
And what about geopolitical risks? We're living in an increasingly interconnected but also volatile world.
Yeah.
Could that impact a company like Berkshire?
Absolutely. Consider their huge stake in Apple.
Go ahead.
A large portion of Apple's manufacturing takes place in China.
Right.
Any escalation in trade tensions or political instability in the region could disrupt Apple's supply chain and impact its profitability, which would then trickle down to Berkshire's bottom line.
So even if Berkshire's internal leadership is top-notch,
Yeah.
External forces beyond their control could still pose a threat. It makes you realize that even a forever stock isn't immune to the winds of change.
Right.
Is there anything else that makes you hesitate about this whole concept?
Well, there's one more inherent risk tied to Berkshire Hathaway's structure as a holding company.
Okay.
It's their reliance on acquisitions.
Okay.
Their growth has been fueled by identifying and acquiring these undervalued companies.
Yeah.
But what if those opportunities dry up?
So their future success hinges on the availability of these attractive acquisition targets.
Yeah.
Which they can't fully control.
Exactly. And let's be honest, the last few decades have been a prime environment for acquisitions.
Yeah.
Low interest rates, plenty of capital flowing.
Right.
Who's to say that'll continue?
Yeah.
If Berkshire can't find the right companies to buy at the right price, their growth could stall.
Yeah.
Making even the most loyal investor reconsider their forever hold.
Okay, so we've poked some holes in the forever stock armor here. We've talked about the management challenges, the risks of disruption and global uncertainty, and the potential for acquisition opportunities to dwindle.
Right.
It's enough to make you think twice.
Yeah.
But let's not forget what drew us to Berkshire Hathaway in the first place.
Yeah.
Its impressive track record, its vast diversification, its deep bench of talent. So where do we land on this forever stock debate?
Well, that's the crux of it, isn't it?
Yeah.
It ultimately comes down to your individual investment philosophy
Okay.
and your tolerance for risk.
Right.
There's no universal right or wrong answer here. Some investors might find comfort in Berkshire's stability and long-term focus, while others might prefer building a more diverse portfolio with individual stocks or index funds.
So it's really not about giving financial advice here.
No, not at all.
It's about exploring the different perspectives.
Exactly.
And what stands out to me is that even if you don't buy into the forever stock idea, there's still a lot to learn from Berkshire's approach.
Definitely.
Diversification, strong leadership, a long-term vision.
Yeah.
Those are principles that any investor can apply, regardless of their specific holdings.
Exactly. Buying Berkshire Hathaway itself might not be for everyone.
True.
But those core principles are valuable across the board.
Okay, so let's broaden our scope a bit here and explore some alternative approaches to building a portfolio that can withstand the test of time.
Sounds good.
So if we're not putting all of our eggs in the Berkshire basket, what are some other strategies that we should consider?
Well, one classic approach is building a diversified portfolio of individual stocks.
Okay.
This allows you to tailor your holdings to your specific interests, your risk tolerance, and your investment goals.
So you're essentially creating your own mini Berkshire.
Right.
But with more control over the individual pieces.
Exactly. That's a great way to put it.
I like it.
It definitely requires more research, due diligence, and a willingness to stay informed about the companies you invest in. It's not a passive approach.
Right.
But for some investors, the potential rewards outweigh the effort.
And let's not forget about index funds.
Yes.
We talked earlier about why they don't fit the strict forever stock definition.
Right.
But they're still a fantastic tool for building a diversified portfolio.
Yeah.
Especially for those who want a more hands-off approach.
Absolutely. Index funds offer that instant diversification across a broad market segment.
Like the S&P 500.
Exactly, like the S&P 500.
Yeah.
They tend to have lower fees than actively managed funds, too, which is a bonus.
Right.
They're great for capturing overall market returns without having to research and select individual winners.
And then there's asset allocation.
Oh, yeah.
The idea of spreading your investments across different asset classes.
Right.
Like stocks, bonds, real estate, even commodities. It's like that old saying, don't put all your eggs in one basket.
Yeah, it's more than just it's a fundamental principle of investing.
Yeah.
Diversifying across asset classes can smooth out returns and reduce that overall portfolio volatility, helping you weather those market storms.
So it seems like there's no single answer to the forever stock question.
Right.
It's more about finding an investment strategy that aligns with your individual goals.
Yeah.
Your risk tolerance and your time horizon.
Precisely. Whether you're drawn to the all-encompassing approach of a company like Berkshire Hathaway or prefer building a diversified portfolio using a mix of strategies.
Yeah.
The key is to stay informed.
Right.
Remain engaged.
Okay.
And adapt as needed.
Because just like the market, our investment approaches need to evolve.
Exactly.
So listeners, as you continue your investing journey, remember those lessons we've gleaned from Berkshire Hathaway? Diversification, strong leadership, and a long-term vision. These are guiding principles that can serve you well. Whether you're seeking that elusive forever stock or forging your own unique path to financial success.
And remember, there's no right or wrong way to do this. It's all about finding what works best for you.
Well said. And that brings us to the end of this deep dive into the world of forever stocks and the enduring legacy of Berkshire Hathaway. We hope you found it insightful, and as always, we encourage you to continue exploring and learning. Welcome back to our deep dive into the world of forever stocks. We've spent a lot of time with Berkshire Hathaway.
Yeah, we have.
You know, analyzing its strengths, acknowledging some potential weaknesses.
Right.
It's been pretty eye-opening.
Definitely has.
But even if, we're not all convinced to run out and buy Berkshire Hathaway stock, I feel like there's some valuable lessons here.
Absolutely. The concept of a forever stock is really intriguing.
Yeah.
But it also kind of prompts a bigger conversation about how we think about long-term investing.
Yeah.
Whether or not you buy into the single stock approach, there's a lot to be said for adopting some of Berkshire's core principles.
That's what I keep coming back to. Diversification, strong leadership, commitment to the long game. Those are principles that can benefit any investor.
Precisely. And while a single stock like Berkshire Hathaway might not be the ideal strategy for everyone, those underlying principles, they're universally applicable.
So let's shift gears a bit for this final part of our deep dive.
Okay.
If we're not putting all our eggs in the Berkshire basket, so to speak.
Right.
What are some other paths we could explore to build a portfolio that can stand the test of time?
Well, one classic approach is to build a diversified portfolio of individual stocks.
Okay, so instead of relying on Berkshire Hathaway's pre-packaged diversification, you're basically creating your own mini Berkshire.
Exactly.
Carefully selecting companies.
Yeah.
That align with your own personal investment philosophy.
That's a great way to think about it. It requires more research, though, and more active management.
Right. But it does offer the potential for greater returns.
Okay.
If you choose wisely.
And we can't forget about index funds.
Oh, yeah, those are great.
We've already talked about why they might not fit the strict definition of a forever stock.
Right.
But there's still a powerful tool, especially for those who prefer a more hands-off approach.
Absolutely. Index funds provide that instant diversification across an entire market segment.
Right.
And they tend to have lower fees than actively managed funds.
Right.
For investors who want to capture broad market returns without having to do all the research of picking individual stocks, index funds are a fantastic option.
And there's always the option of combining strategies, right? You could have a quart of index funds for broad exposure, and then maybe sprinkle in a few individual stocks in areas that you find particularly interesting.
Exactly.
Find the right mix.
It's all about finding the right mix for you.
And, of course, asset allocation.
Yeah.
Spreading your investments across different asset classes.
Right. Stocks, bonds, real estate commodities.
It's so important.
So it seems like there's no, single answer to the forever stock question. Yeah. There's no magic bullet.
Yep.
It all comes down to aligning your investment strategy with your personal goals.
Yeah.
Risk tolerance, time horizon.
Exactly. Whether you're fascinated by the idea of that single, all-encompassing holding like Berkshire Hathaway, or you prefer a more customized approach.
Yeah.
The key is to be informed.
Be engaged and adaptable. Because just like the market is constantly evolving, our investment strategies need to evolve as well.
Couldn't agree more.
You know, this deep dive into Berkshire Hathaway has been about so much more than just one company.
It really has.
It sparked a broader conversation about building for the long term and finding an approach that works for you.
Absolutely. And remember those principles we've discussed. Diversification, strong leadership, and that long-term perspective. Those are timeless.
Yeah, they are.
They can guide you no matter what path you choose.
Well said. Thanks for joining us on this deep dive into forever stocks and the fascinating world of Berkshire Hathaway.
It's been fun.
We hope you found it insightful, and as always, we encourage you to continue exploring and learning